Good morning, good afternoon, good evening, everyone. Michael Zuber, one rental at a time, and it is Monday, and we start off strong. We have our expert, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you today?
I'm doing great, man. Thank you for asking. So I've been waiting to ask you this question. We had the ruling from the Supreme Court late Thursday of last week. So the CDC eviction moratorium is unconstitutional. Evictions can now start in, I think, 44 states. I think there are 6 states where they have state-based moratoriums going longer, California being one of them, New Jersey another. But what I want to talk about there is, do we think that now that evictions can start, do we see that potentially unlocking inventory that was maybe stuck? Maybe there were owners that's like, hey, I'd want to sell, but I'm not going to take a huge discount because my tenant's not paying. And then we might as well work in forbearance, mortgage forbearance. It started, I think it's Black Knight that does this. It started as high as 4.1. It's now 1.5 million mortgages are in forbearance. So all of that said, is there a wave of inventory coming, a trickle, in any gut opinions on all of that?
There's really no way to really know until it happens. Now, there are some people I know that have investment properties that don't want to deal with anything else moving forward once they remove tenants.
Mm-hmm.
I know some that have sold their properties with tenants in place.
Yep.
So you're going to have a mixture of all of that. And there's really no way to know. The bulk of the investment properties that are owned in this country are owned by individual owners, mom and pop owners, people like you, people like me that invest in properties, things like that. They're not largely owned by institutions, and those are just facts and numbers that everybody can back check. So the real question is, what is the appetite of the owners at the end of the day that don't want to have to deal with something like this again? So is it enough to make a dent in the housing market? I doubt it. There's a lot of demand, pent up demand out there for investors, for owner occupants. So I think any of that type of potential inventory, even if everybody capitulated and said, I'm done renting houses, I think there's enough demand out there to buy them up.
Yeah, I've been thinking about this for a while, right? There's a spectrum of housing units. And generally speaking, again, I'm the one rental at a time guy, right? So I've been talking to landlords for 14 months now since this CDC has come in. And you're right, some have capitulated early, right? Hey, I'm done. I'm going to sell, tenant occupied, and cash out. Most of the ones I talked to, the talk track was, because again, you got to hear talk track and then what do they actually do? Lots of them. I don't know, probably 70% of the ones I talked to who own the property more than 10 years. So they're older, right? They're not just new landlords. They're like, Michael, once this thing gets over, I'm going to kick them out and I'm going to remodel and I'm going to sell into a hot seller's market, right? We've had a seller's market, I don't know, for a couple of years now, just crazy, right? There's only 1.32 million homes available. So that was the talk track. And again, it would be kind of the missing piece of our housing market, right? We are missing the low end. A lot of the transactions have been because of the K-shaped recovery, a lot of the, above the median across the country. But you're right. I think it'll be interesting to see if they follow through, because what else have we seen? I just talked about today, Craig, there's Boise, Idaho, rents are up 39% in a year.
Yeah.
It's like, what? So I'm suspecting there's a lot of landlords that are going to, remove the problem tenant. They're going to look at the rental market going, I can get what for my house? And they're going to keep them. That's what I think is going to happen, but I don't know.
Yeah, there's a lot of demand in, the migration states where people went to, during the pandemic, put a lot of pressure on all kinds of inventory, rentals, permanent housing.
Yeah.
So there's big rental demand. Rents are up 20, 30, 40% in some markets and, pockets in some areas. They were down in some other areas where people were leaving. But, at the end of the day, housing is just one of the best investments you can make from an income property, income standpoint in terms of income producing asset with tax offsets, things like that. So there's always going to be demand from investors. And right now, this demand for buyers it's solely interest rate driven. And as long as the rates remain as low as they are, the affordability index of a monthly payment is pretty low right now in comparison to incomes. Probably, I think you and I did the charts, lower than it's probably ever been in the history of housing from a payment standpoint. And again, that's what people are buying, is they're buying payments. It's all, the housing market is artificially propped up by interest rates. And as soon as that demand As soon as the rates rise and demand drops, that'll put more pressure on rental housing.
Yeah, absolutely will. Yeah, I was just doing the math because again, I was, I don't know, 4 months ago, I was like, oh my God, we're going to lose 20% of affordable housing, right? Just because all the landlords I talked to are like, I'm done. I bought these things in the 90s. I'm too old. The government shouldn't be in my business. Why am I suffering? All that talk track, right? But now that we're on the other side, I'm already hearing landlords going, Michael, the last tenant I got $1,200 for this house. I think I can get $1,850. And I'm like, cool. Oh, by the way, Michael, I refied my mortgage during this crisis, and I went from a 5.875 to 3.125. And I'm like, fixed, right? Yep, fixed. I'm like, well, let's see. If your payment went down $250 and your rent goes up $600, how's that feel? It feels pretty good. I'm like, so you're gonna sell? Hell no. So I don't know. I just don't know. I mean, how many people are going to be fed up with this and sell versus look at the picture and going, wow, never been a better time to be a landlord?
You'll have some, but again, is it enough to make a dent in demand for the product? No.
Yeah, I think it's going to be a lot.
You're not talking about millions of people in a healthy housing market. You're talking, how many properties sell each year in a normal housing market? I don't know.
It's about 6 million.
Yeah. So, I doubt you're going to see that much. And a lot of it's multifamily. So a lot of this moratorium and eviction issues are mostly, multifamily, those types of things. They're not single family houses. And multifamily investors, it's, maybe 5% of their tenants are in this program and, aren't paying. And there's relief for landlords. There's relief for tenants. So I don't think that's enough to make a dent. And
I was pretty certain we were going to lose 10%, but that was kind of in the throes of it. Again, it's always that classic thing. Don't watch what people say, watch what they do. Yeah. And I already see landlords who I were certain were going to sell. Like they were just like venom, like, Rawr! And now they're like, oh, maybe not so bad on the other side.
Yeah, they probably have a waiting list, to rent the property. You know what I mean? Because there's so much demand out there, and as soon as they can, get people out of the property or get them paying or get relief, whatever the program is, and their plan is, at the end of the day, I think there's going to be people waiting for those units.
So let's now go to mortgage forbearance. So that's eviction. CDC behind us. We'll actually see what happens with rentals.
That's residential. Commercial, whole different ballgame.
Oh, different ballgame. Oh,
yeah, a lot of stuff there is still in serious trouble.
Oh, I agree. I believe the people talking housing crash should just tweak it to multifamily or commercial crash, because it ain't happening in residential.
Shopping mall crash.
Yeah, exactly. Office crash. So let's talk about the mortgage forbearance, right? This was a scary stat, but again, I've been through the last crash, so it wasn't nearly as scary to me. The highest number I saw from Black Knight was 4.1 million mortgages were in forbearance. It's now 1.5. So that means 2.6 million cured. You think suddenly this 1.5 million is going to hit the market and just decimate, owner occupied housing?
No, I mean, even again, if 1.5 million houses hit the market today, they would all get absorbed. So there's so much demand out there, you would get them sold before it creates any kind of a problem. And you saw the numbers yourself, when you go look at Black Knight data, or if you just Google that term, mortgage forbearance, you'll see that out of those 2 million that are cured, most of them stayed in their houses. Some of them sold. Very few ended up going back to the banks. Very few.
Yeah, this is from memory. I did a video on it because, again, people talking about this wave of foreclosures don't understand basic math. So I believe it was a quarter of them. Let's just round them to round numbers. A quarter of the people that got cured never missed a payment. Mm-hmm. Another quarter caught up. So half of them either kept paying or had the money to cure what they were behind. So of the 2.6, 1.3 million of them just cured. They had the money. They're good. The next biggest bunch, they reset the term, right? They went from, 26 years left to 30, sometimes 40. They did stick payments on the back as seconds, 0%. But long story short, less than 1% became a motivated sale, meaning they didn't have any equity and they had a short sale or deed in lieu or something of that nature. Less than 1%. That's like 30,000 homes.
the housing market bears, the people that are calling for the crash, they're looking at 2009, whole different situation, whole different environment.
Mhm.
And the biggest difference out of all of it is the banks were not working with anybody or even willing to work with anybody back then. Whereas this go around, they were in the front door before anything
Yeah.
happened and
Check
said, look,
this box on this website. You're good. What?
right, right. Now, if they'd have done that in 2008 and 9, that would have saved a lot of people a
Oh,
lot of pain. It would have saved the economy a lot of pain. I mean, to me, it's
exactly.
mind boggling that they couldn't step up to the plate last time and do what they're doing now. And now they've overstepped it. So
Yeah,
they've
exactly.
gone to the extreme the other way. So I'm extremely bullish on the housing market. Um, Even in commercial, I'm extremely bullish there long term because there's a lot of redevelopment opportunities and there's so much pent up demand because we haven't been able to deliver units. So again,
Exactly.
housing, real estate, commercial, residential, doesn't matter what it is, it's supply demand. The crashes that we've seen, forget 2008 and 9, there was a little bit of oversupply then, but generally when you see real estate crashes in the history of real estate, it's been oversupply, too much development, not enough demand. So it's just supply demand and it happens, boom and bust cycles in real estate and in commercial
Yep.
and in construction. It's been the way it's been forever. So right now we are 3 or 4 years backlog. If you could put everybody to work right now and start building through the demand that's out there, it would take 3 or 4 years to deliver enough housing units to the market.
That's funny. I talked about that this morning on my daily financial news when people, and because again, I've been in housing for 20 years. I've, studied economics since I was in college, and it is a supply demand thing, but you just hit the big like bullseye to me. Demand moves faster than supply, right? Just talk Boise, Idaho. We go through the shutdown, people work from home, people in California, Washington, these coastal towns are like, I'm getting out of Dodge. I don't like the politics. I don't like this. I don't like that. And then they go to a market with 100,000 units or 120,000 units. It doesn't take but 5,000 new people with cash from selling their homes to just totally change the market overnight. Because again, supply doesn't come that fast, right? They're now building new communities and all of that, but those are years into the future. Supply
The
just doesn't.
population's growing, and I'm assuming we're going to have somewhat of a baby boom coming out of the pandemic years. A lot of people just like the war years.
Yep.
We had the big baby booms.
Yeah, that's
So
true.
population's increasing. We've had supply chain constraints, labor constraints. It takes longer to deliver units to the market. You have a lot of construction that's being built for rent instead of for sale. So for an end buyer
Yeah.
for sale, housing market metrics, there's huge supply shock and supply constraints right now. Lumber's come down,
Yeah.
but labor hasn't been resolved yet. And until we resolve that part of the equation, and even supply chain, still with the Delta variant, the constraints that we have there and the issues we have in the supply chain, container costs up,
Yeah.
shipments
40
delayed, all that
grand where
type
it
of
used to
stuff.
be 8. Yeah.
Yeah.
It's crazy.
So it's, there's still a lot of issues out there and, but it's all hyper local. So you're going to have pockets where everybody left and you're going to have supply there in excess of the demand. So what happens? Well, people see that like New York City and they start moving back in. So New York City back on the upswing again.
It is big
even
time.
San Francisco, I've heard that that's back on the upswing again with a lot of people that left. A lot of people are moving in. So
yeah, again, it's funny. I looked at those numbers this morning, right? Because again, there was a chart. Let me get it. I think I have my notes right here. One sec.
Yeah, it's all cycles. And again, I'm bullish to the max on the housing market, on the real estate market until interest rates change. We get over 4%, I'm a bear.
4%. Okay.
That's
so here's
my
the
number, 4%.
Here's the rents. Again, these are crazy to me. Boise, Idaho up 39%. Spokane, Washington 32, Fresno 26, Gilbert 20, Arizona 24, Glendale 24, Tampa 24, and Las Vegas 23%. Crazy.
And what you got to think about too is it sounds like a lot, but if you're renting a house for $800-900 a month, going up 20-30% is not a huge amount in the whole scheme of things, especially if you haven't raised rents in a while. So you start getting up into $2,000 a month rents, it's a little different. But
yeah, these are mainly tertiary cities. Yeah, it's going to be interesting. And again, the other thing that's going on is property taxes are going up. Right, a student of mine sent me a snapshot of his tax statement. It went up 100% year on year, 98% technically, 98%.
Oh yeah, cost of ownership's going up exponentially. So it could potentially be a wash at the end of the day because taxes are going to go up, insurances are going up. All the natural disasters we're having everywhere. Insurance companies going to spread that out across the country. So you'll see premiums go up. Utilities have gone up. They consistently go up. So we're in an inflationary environment right now across the board at all levels. From wages are up right now. And because of the competitive labor market or job market where employers can't get enough people, there's more jobs than workers right now, or people looking for work until the end of September, when that unemployment benefit expires.
September 6th, actually. September 6th.
Oh, okay, the beginning of September. So yeah, just after Labor Day. So whoever made that one was very smart. Like didn't one last weekend.
Exactly. So again, I just want to go back to something you said, because I think you're spot on, right? You're basically bullish on housing as long as we can keep the 30-year fix below 4%.
Yeah, well, even short-term rates, below 4%, because interest only. That's your construction loans, that's your development loans, stuff like that. And even that's not bad. Again, in my heyday, I mean, I've been building and developing for 20 years. Or more, 23, 24, 25, whatever. I can't keep track anymore, but since 1997. And I was paying 9.75% interest on my construction loans.
Wow.
So even 4 or 5 is still phenomenally low. The problem is land prices, construction costs have gone up exponentially.
Right.
So, that offset, is there. So I think 4% is the magic number across the board. You will see everything come to a halt in the real estate market if we start crossing 4%, because that's just, that's like $3 gas, and where you're at, it might be 4, it might be the number.
Right.
In my area, you get over $3 in gas, that changes behavior.
Yeah, exactly. It's behavior change, consumer change. This has been a lot of fun. Video number 2 is going to be negative rates. We've kind of touched on that in this conversation with inflation and rates. We'll do that more depth in topic number 2. But before we do that, Greg, how can people follow you?
GregDickerson.com. Everything's there. My YouTube channel, podcast. Go check it out. I talk about all kinds of stuff, real estate, entrepreneurship. GregDickerson.com.
Yeah, do yourself a favor, follow Mr. Greg Dickerson. He covers all kinds of topics and has a wide range of experience. Thanks, buddy.